About fucking time. Mm.
We are facing major structural changes related to aging, greening of the economy. And with all that, we have to deliver on our mission, price stability. So if you're interested in those issues, come to the ECB forum in Sintra. We will debate all that and more.
Welcome back after lunch. I'm delighted to announce one of the highlights of the ECB's Sintra Forum, our policy panel. The world economy is undergoing a period of rapid and intense change. The questions of our next panel, the questions for our next panel will cover what these fundamental shifts mean for the future of monetary policy. And we are honoured to have an exceptional lineup of officials to answer them. We are also honoured to have Francine Lacroix, anchor and editor-at-large at Bloomberg Television, to be guiding the conversation. Francine, the floor is yours.
Claire, thank you so much for that introduction. What can I say? We have 1 hour and there's a lot to discuss. So welcome to the policy panel, Sintra 2025. Now, from tariff-related trade ructions to oil price gyrations caused by also Middle East hostilities, there are many questions on, first of all, how to handle the fallout from some of the political decisions, but much more how the economy behaves. Now, 1 year on since the last Sintra panel, and of course, halfway through 2025, global policy needs to navigate risks posed both to inflation and growth, a challenge highlighted by the Bank for International Settlements in a report this week. So let's get started. We have 1 hour. Kazuo Ueda, Governor, Bank of Japan. Of course, our host, Christine Lagarde, of the European Central Bank president. We have Jay Powell, Chair, Board of Governors of the Federal Reserve System. We have Chang Yong-ri, Governor, Bank of Korea, and then Andrew Bailey, Governor for the Bank of England. Madame Lagarde, let's start with you as our host. So first of all, thank you so much for having us all here. We had a little bit of data today, this morning, consumer prices rising some 2% from a year ago, up from May's 1.9%. But then the tariffs still loom large. So how do you see that developing?
Well, first of all, I would note that we are at 2%. And this is the latest reading. This is also the target that we have had, and this is the projection that our staff is indicating for the medium term, which is exactly what we had anticipated. So I'm not saying mission accomplished, but I say target reached, okay? And I think we should start by recognizing that.
Yo, that's going to
We
trigger
faced
Trump.
massive amount of shocks.
That is going to trigger him.
Compounded shocks occasionally. And
He's
we
going to
are
say
now
something about Powell after
through
that shit.
disinflationary process that we have conducted over the last 2 years. And yes, we are facing a lot of uncertainty. Yes, we are facing the risk of fragmentation increasing. And yes, we are facing geopolitical developments that are worrying generally, but that also are causing two-side risk to inflation. So we have to continue to be extremely vigilant. We have to continue to be committed to delivering on our target. And I think we are at this point in time in a very good position to do that. So we are well equipped to navigate the tormented waters that we should anticipate.
Chair Powell, tariffs are not yet showing up in inflation. Is this forcing you or your staff to actually rethink what the models say about how much the tariffs will ultimately through some of the final prices?
So thank you, Francine. And Christine, thank you to you and your colleagues for putting on another great conference here today. It's been a pleasure. I guess I would start, if I may, by saying that the U.S. economy is in a pretty good position. Inflation has come down close to 2%. We're at 2.3 headline, 2.7 core. The unemployment rate is at 4.2%. So we're healthy overall. If you ignore the tariffs for a second, inflation is behaving pretty much exactly as we have expected and hoped that it would. We haven't seen effects much yet from tariffs, and we didn't expect to by now. We've always said that the timing, amount, and persistence of the inflation would be highly uncertain, and it's certainly improved that. So,
the sound quality of this, you can hear the echoes of the mic.
Higher readings.
It's horrible.
But we're prepared to learn that it can be higher or lower or later or sooner than we'd expected.
But Chair, would the Fed have cut more by now if it weren't for the tariffs?
So I think that's right. In effect, we went on hold when we saw the size of the tariffs and
hey, what's up, Alfred?
All inflation forecasts for the United States went up materially as a consequence of the tariffs. So we didn't overreact. In fact, we didn't react at all. We're simply taking some time. As long as the U.S. economy is in solid shape, we think the prudent thing to do is to wait and learn more and see what those effects might be. And again, they haven't really shown up. So for now, we're waiting.
Governor Rhee, I mean, South Korea's economy is, of course, highly reliant on trade. Putting aside the deals that each government can strike with the Trump administration, what can central banks in your position do to shield economies from the impact of trade tariffs?
Actually, about the tariffs impact on inflation, our current inflation is well stabilized around 2%. And we believe tariff tends to be deflationary rather than inflationary for 3 reasons. One is Korea is not likely to use retaliatory tariff. Second, we import 22% of our import from China. And recently, export price of China has been falling at 5% a year for several years, and we believe that it will continue to do so. And at this moment, our growth rate is 0.8%, which is well below our potential growth rate. So aggregate demand pressure is much lower. So our problem is not the inflation itself, but the gross impact of tariff.
So what does that mean you'll do going forward?
Yeah, actually, we have been in an easing cycle, and we cut our interest rate 100 BP from last October. And we will continue to be in an easing cycle given our growth rate. But recently, financial stability risk has been rising, especially housing price in metropolitan area is increasing very fast. So we are keeping an eye on this financial stability risk in deciding the pace and the timing of the further cuts.
Governor Bailey, you've taken the view that the latest rise in inflation.
You said YM is moving right now?
Transitory. Why are you so confident that inflation will fall back?
Actually, you may have detected I've tried to avoid using the transitory word because oddly enough, it has a bit of a history. But to be serious, obviously any increase in inflation is an increase in inflation, sorry to state the obvious. the reasons it's gone up is really entirely due to so-called administered prices. Now, that's, as I say, that's an increase in prices, don't get me wrong. But it's not telling us much or anything about the context.
Wow, this is a small
of the
opening
economy.
range.
In other words, it's not telling us
It's a
anything
tight
much about the
opening
balance of
range
supply
on
and
both the
demand in the
instruments so
economy.
far.
So I think the key
real
judgment
tight.
for us is, are we going to get second round effects from this, this pickup? And of course, it's nothing like the pickup of a few years ago, just to be clear. And my judgment is at the moment is that the context is different, that we do see evidence.
So we have a lot of data coming up. So this is about an hour that they said it
We're not going to have to
was.
see those come through, though. I mean,
And at 9
come
o'clock,
through
we have a lot of data
into
dropping at 9.
prices.
So
I think we've still got to see the evidence and prices.
this thing can chop.
But that background context allows certainly me to say, look, I think the
Yeah.
direction continues of interest rates continues to be.
I bet it's just waiting on that job data to drop,
When
honestly.
you look at all the uncertainty, again, it's a bold call given what happened to oil prices and trade negotiations.
It is. I mean, I would say two things on that. One, I think as others have said, it's probably, Jay was saying, I think it's a bit too soon, I think, really to see the price effects coming through from the trade and tariffs action. We've made a point of saying also that, I think as Christine was saying, that these are two-sided. They could go either way. Could be weaker demand. We could see supply chain disruption. And the second thing, of course, is that, some of these effects, if you take the oil price story, I mean, it's gone up, it's come down, all since our last meeting, effectively. So, we always reach for the lexicon at this point. I mean, we've added unpredictability to uncertainty. I was slightly amused at the introductory film this morning with Christine saying all these words, because it's true. Because not only are we getting uncertainty in the sense, the range of outcomes, but unpredictable in the sense that if you get things like, the tariff action, history really isn't a particularly good guide to that, actually. You can't really draw much from the past on that.
Now, Governor Ueda, you're in a slightly different situation.
All right, we got 2 more minutes.
Japan CPI has stayed above 2% for 3 years now. What do you see as a fundamental?
And it's kind of obvious that we'll get a down day, or at least a rebalance back into price support. I mean, it should be obvious at this point that the bulls have taken their profits already.
For almost 3 years, while what we call underlying inflation is still somewhat below 2%. That's the situation we are in. But if I could decompose it further, there's probably about 3 components to it. First, there's underlying inflation dictated by wage price dynamics, whereby.
So we're about to lock in the range.
Prices,
we got 30 more seconds. We locked the range in.
Prices, helped by resilient domestic demand. This component has been going up slowly. But as I said, it's still somewhat below 2%. Then there's going to be perhaps a second component, which will be the
and shit, gold is just waiting too. Like, honestly, I hate when gold does this. I hate when gold has these big moves down because it does these big V bottoms up, and it's hard to get into this safely as it continues to trend higher. I hate it when that happens.
Generated by increases.
Trying to find a good entry into it.
This component.
All right, so we locked in the range on both the Nasdaq. Let's do the Nasdaq first. All right, so there's the low right there.
We think the first component and the second component will produce a slow increase in underlying inflation toward 2% by end 26 or 27. The third component, food inflation, is
all right, so that's the low.
Toward the year end.
And this is the high.
So that we will be closely monitoring.
That is 821.25.
Governor, how do you view trade concerns the day after President Trump threatened Japan with more tariffs?
Well, it's being negotiated by our minister in charge, so I'm trying to avoid making any specific comments on this.
So let me just ask you, what will be the key trigger for Japan for deciding further rate?
All right, so that's our range for today.
Okay, as I said, it will depend on the relative strength of the 3 inflation dynamics I was describing, and we need some more information to determine.
250.
President Lagarde, when you look at rate cuts, I mean, are we gonna, where do you see actually the ECB going? You're in a pretty comfortable position right now out of all the central banks.
Data will tell. So I think we are determined to continue to be data dependent, to decide meeting by meeting, and to not commit to any particular rate path. That's the doxa. And we're very lucky because we have just completed our strategy assessment, which really gives us a good framework and good strategy lines within which to operate. But those three aspects that I have mentioned, data dependent, meeting by meeting, no commitment to any particular rate path, are constant in that ongoing strategy based on what we have concluded actually yesterday.
Jay Powell?
So from our standpoint, as you will have seen, a solid majority of FOMC participants do expect that it will become appropriate later this year to begin to reduce rates again. And so, that will depend, though, as Christine just mentioned, on the incoming data. We'll be monitoring particularly what does show up in terms of inflation or what does not show up, and also carefully
All right,
watching
there goes
the
our
labor
range.
market. You know, we watch very carefully for signs of unexpected weakness. We see a gradual cooling, but we don't really see that yet. So those are the things we'll be watching. But as I mentioned, a majority of us do feel that will be appropriate in the remaining 4 meetings of the year.
I think the range breakout to the downside is what we should be paying attention to. But
about 12%
I
against the dollar so
mean,
far
anything
this
can
year. Are you
happen.
concerned that
But I
its
think we should be
strength
paying
runs
attention to the
counter
range
efforts
breakdown.
to also loosen financial conditions?
You know, I'm not going to comment on the exchange rate. We take it into account for purposes of our projections. Obviously, it has an impact, but it's a reflection of the market conditions and assessment. It's also a reflection of the strength of our economy. But there has been a clear appreciation relative to the dollar. Depending on how you look at it, it's either a depreciation of the dollar or an appreciation of the euros. And there might be a bit of both in that particular case. We're also looking at the movement, the flow of capitals and the attractiveness of euro-denominated assets, which is also an interesting phenomenon that we've observed lately.
Chair Powell, I mean, is it fair to say, I know, nothing is guaranteed, number one, we all know this. Barring a real surprise, is July just too soon to seriously even consider a rate cut?
Yeah, I really can't say. It's going to depend on the data, and we are going meeting by meeting.
Damn, bro. Damn.
You know, how I'm thinking about that, but I wouldn't take any meeting off the table or put it directly on the table. It's going to depend on how the data evolves.
242.
Governor, what's the biggest risk stemming from protectionist trade policy, actually, for the global economy and for South Korea's? The biggest risk stemming from trade and protectionist measures?
You know, Korea has a quite export-driven economy. So whatever the global fragmentation is a serious impact. Not only direct impacts through the US tariff, but also indirect impacts through China, Mexico, Canada. And we easily can, it really depends on what's going to happen on July 9th.
And this is what I don't particularly care to
waiting
do.
for the result, but
Stuff
we don't
like
know
this
what's
is I
going to
don't care to
happen.
do this.
But for example, like if the tariff goes back to 26% retaliatory tariff that was announced in April 2nd, and then also with a lot of sectoral tariff which affect our economy, aluminum, steel, and cars, we can easily say that it has impact larger than close to 1%.
We got the range breakout on the ES already.
Depending on how long it lasts, I think we have to adjust to the new supply chain, so the impact will be larger. So, but I hope that scenario won't come.
What is the most concern for the Bank of
You
Korea?
got the range breakout on the ES.
South Korea exports slow down in global trade or a downturn in the US economy?
It's all linked, right? It's all linked, right? So the global economy slow down. And one thing, I mentioned some negative sides only, but one positive side, I don't know if it's a positive or not, but Korean companies has been preparing for the supply diversification long time ago before the tariff, US tariffs started to, because we have some issues with China, and then also Chinese industry has become very competitive. So we had to relocate our production site from China to elsewhere. So relatively speaking, we are well prepared. And second, still good thing is that we have some strong industries such as semiconductor, which benefit from the AI technology development. So I hope that we can manage it. But on the other hand, given just we look at the sheer size of the export dependence, we will be significantly affected.
Governor Bailey, do you think interest rates will be closer to 3 or 4% at the end of the easing cycle, given all of the inflation and trade dynamics?
That's a subtle way into the R-style question, actually, I would detect. So look, I'm fairly cautious about the whole discussion of the level of R-star and therefore sort of where rates are going
A range breakout happened on the ES.
There is huge
And
uncertainty
we got the
around it.
freaking
What I think
range
is
breakout on the
important,
Nasdaq
and
too.
what we spend our time looking at is how restrictive
So
is
far.
policy, both now and going forwards. And our staff do a huge amount of work on that front to judge the restrictiveness of policy in the current context, and how restrictive it's going to be looking forwards if you project forward with the market curves. And the assessment we've got at the moment is that policy remains restrictive. It will continue to be restrictive, although the level of restrictiveness will come down over time, which is what I would expect. So I would expect that level of restrictiveness to come down to a point where it goes more neutral. But I think you have to judge that in context. Just to give you an example of that in the UK economy, the level of household and corporate debt in the UK economy is actually lower than we would have expected it to be, but based on past experience. So again, that feeds through into just how restrictive policy is.
Yeah, I wasn't even paying attention to the ES. I guess I should have been.
Than it would have been historically.
I guess I should have been paying attention to the ES.
On the neutral rates, Chair Powell.
We might get a pullback on the ES.
So I think
I'm
countless.
I'm gonna take it. I'm gonna take it on the ES.
At the end of the day,
I'm just gonna attach this to the.
I like to look at the economy and ask whether.
But then I don't know, man. For whatever reason, I feel like
and want.
You know what? It doesn't matter what I feel. We trade the charts, not our hearts. It don't matter what I feel. I'm gonna attach my limit to the 21 EMA on the ES. We got the breakout. They hold the pullback. We should see a continuation. But what I will say is that, yeah, the EMAs are supporting a bullish move to the upside. We did get a big move up, a pullback. This was a deep enough pullback back into support. So it wouldn't be too hard to believe that we see a continuation here. I'm just going to attach my limit to the 21 EMA on the ES. I feel that that's a more reliable strategy. If you miss the breakout, price will eventually pull back to the 21 EMA eventually.
Or are where we should be. I don't want to pass judgment on that.
Eventually.
That discussion becomes less relevant. I think what our staff at the ECB
on the Nasdaq though, I kind of need to see a couple of fake outs first. I need to see a couple of fake outs. I don't trust the Nasdaq like that. I don't think anybody should.
For instance, with what the US neutral rate is at the moment.
My only concern, at least for the ES, everything looks good in terms of like the EMAs and structure. We could see a rejection from this swing high right here at 257. This is a classic two-legged pullback into support. We can have price trade right back into this area, and we can have a dip right back down where the bulls can, come back and probably buy it if we see a move going straight up to retest that high. But we got 5 minutes to that 9 o'clock data comes out. 5 minutes into that 9 o'clock data comes out.
But I think
into that data drop.
Restrictiveness is of course critical to our judgment because that's critical to the transmission mechanism of policy, which we have to judge every time we meet. So that's a judgment that, in a sense, we renew every meeting we have.
It's been clear that if price pulls back and it finds support at the 21 EMA, then the next breakout out of the Nasdaq should be legit.
We will judge it each time.
Governor Ree, similar.
I have nothing to add.
Yeah, how would you see it, Governor Ueda?
You think we're going down?
Yes, so we also estimated something like the neutral rate a number of times. The range of estimates is very wide. So, but at least we think we can say that the current rate is below neutral. But
yeah, it definitely will.
I would refer to what
Jay
Jay said a year or two ago in the Jackson Hole conference, which was like, we are guided by our stuff, but under cloudy sky.
President Lagarde, can you talk to us about scenario and why this is, because of the shocks and actually the changes that are going very fast, why scenarios make more sense as a template of the economy?
Oh, okay. So this is a topic that we have largely debated as part of the strategy assessment that we conducted in the last year. And I think, in fairness, the baseline, which is, the essential
All right, so we'll see.
projection on which we
I took the orb,
determine our
the pullback to the 21,
holds
and
is
I'm betting
decisive
on
in our consideration.
a push higher.
But at the same time,
I'm betting
our
on it.
staff has, I wouldn't say forever, but as long as I know myself, has always conducted scenario analysis, sensitivity analysis, in order to arrive at the most solid baseline. It is probably the case that we will do more of it, more systematically, that we might publish more often than we have. We have published, I think, in the last few years, in four circumstances, we have published scenario analysis. The invasion of Ukraine was one, COVID was one, the oil crisis as well, and the tariff threats. So all those were exogenous factors that were sort of hitting our screens. I think we might do more scenario analysis that will be looking at the longer term trends that will affect our economy, and that will inform and strengthen our baseline, enhance it probably in its reliability. So that's what we are debating at the moment. How this is built, what assumptions we make, what choices are decided in terms of publishing will be determined by the Governing Council in good intelligence with our staff.
Yeah, and J-Pal, on scenarios?
So for many years, we have used scenario analysis internally. And I personally find it very useful. I think many of my colleagues do too. You have just many different kinds of scenarios. We have 6 or 7 at every FOMC meeting. They're often the topic of discussion among governors and at the meeting. We have not taken the step of using them as a public communications device. And that's a big difference. So that's one of the things we're going to be talking about this fall. We will wrap up the first part of our framework review, which is
I probably should have done the same. I probably should have waited.
We expect to by the end of the summer. And then we're going to use the fall meetings to look at communications ideas, and that's one of the ones we'll look at. I will say it has a lot of appeal and a lot of questions, and so my expectation is if we're going to do something in that area, it's going to be putting a toe in the water and not just throwing ourselves in, over Niagara Falls on it. So I can imagine a situation where we would try that in a particular circumstance, but for us, we're just going to do the work and understand it.
All right.
Central banks are doing.
We got data dropping in the next 50 seconds.
In our case, we use the
40
scenario
seconds.
analysis in our risk management section as a kind of representing the tail risk. But I have to read the ECB report. But if we have to move that section into the more forecasting section for public communication, I wonder whether it's going to be easy to get some consensus, which scenario we have to do it among our probably members in the monetary policy meeting. So because that scenario and those underlying assumption may be much harder to communicate, to agree among the members. And also, it's specific to us, but how I can differentiate the previous approach of risk management section.
Yikes, look at that.
Yeah,
damn.
What we have to do.
Yeah,
So
damn.
2 things I would add, and it's very much in the same spirit as
Well,
colleagues.
I mean,
One,
damn.
we introduced 2 scenarios.
Damn.
In the
NQ?
May,
Shit.
round and
Damn.
the May report. For me, they were very useful. They were either on either side. They weren't symmetric, by the way, but they were on either side. For me, they were very useful in terms of my decision making because they helped me to answer the question, given the uncertainty. If we're wrong, if I'm wrong in my judgment, how wrong am I going to be? Do I think I'm going to be? And what would be the consequences of that? And what would we then have to do to deal with them? I mean, is it manageable? And that was helpful. And then I think the question coming back to what Jay was saying in terms of public communication. I mean, this is the big step, I think, and it is challenging.
It definitely has.
Because I say this quite a lot. We make a lot of conditions.
The question is, will it be bearish or bullish? That's the question.
The many interviews you do. And I'm not making a personal comment now, Francine, but a lot of those conditional comments get immediately translated as unconditional comments. It's sort of life.
We're quite careful, but
no, it's not personal. This is the general point. And so the reason I say this is that if we, and that's about the central case, by the way. So if we introduce scenarios, that's a message to us that you're going to have to do this very carefully in that world, because to get the point across.
Actually, let's look at that data real quick. Let's see what happens.
There's always risk. How you calibrate those and how you, as Jay was saying, how you communicate those publicly is critical, but pretty challenging, frankly, in that environment.
Governor Ueda?
Yes, we also carry out many simulation exercises about scenarios, but we have not, as far as I know, published them. We do discuss in our quarterly reports qualitatively.
Well,
risks,
the job numbers came in better. It came in better than expected.
Say,
that shows strength. So,
rough way, we are carrying out something like a risk management approach to monetary policy making.
It shows strength. We'll see how the market reacts to it. See if we get a bearish reaction from that. That's not going to signal to the Fed that they need to cut rates.
I can't come up with a good example, but risk scenarios, thinkings about tail risks sometimes do affect our monetary policy making.
Can I ask you all about the dollar, everyone's favorite subject? So when you tune out noise, right,
yeah, I appreciate that,
of the past few months, what has really changed about the dollar? Governor Rhee, are we really seeing some sort of paradigm shift in the status as a reserve currency? That means historians will look back on 2025 as some sort of
random limits on gain weight.
I don't think so, especially in case of Korea. Our Korean won has appreciated significantly in the last 2 months. But I think it's mostly due to the very unique situation that we had. We had a very unexpected, unnecessary martial law declaration in
below that candle.
And after that, this political risk, together with the slowdown of our economy, really make a Korean won depreciate much more than our fundamentals explain. So in some sense, the appreciation that we have observed in the last 2 months, in some sense, normalization of our
oh shit, let's see what's gold doing.
And as for the kind of long-term shift of the dollar sentiment, we have discussions, but looks like people are talking about it, but at this moment they keep the dollar assets while they're increasing the hedge ratios. So at this moment, I think the lion's share of the impact, BIS report show this one is impact is mostly moving from the unhedged to the hedged positions. So we have to see what will happen in the future.
Yeah, Governor Bailey?
Well, I'd say two things. First of all, I think that it's important to bear in mind what the sort of the definition of a reserve currency is, and how it's evolved over many years. So I like John Ray. I don't see there being a sort of a major shift at the moment. Not least because in this day and age, the definition of a reserve currency has as much to do with the supply of safe assets into the market that can be used for all the purposes of sort of collateral and security that they are, as much as it is about a sort of pure exchange rate. So I think we're a long way off that.
We'll turn into old people.
Happening.
All right.
The second thing, I was going back to something Christine was saying earlier. I mean, when we look at financial conditions, which we do, of course, but I do think particularly, I always believe this, but I think it's even more relevant at the moment to unpack a financial conditions index. And the reason I say that is because we've seen a breakdown in the correlations of the components of a financial conditions index. So you look at sort of bond yields, you look at exchange rates, you look at equity risk premium, for instance. Those correlations are not the ones that we've tended to see established over time. So you have to look at it much more carefully. There are stories to my mind about each of the components of that. So when I look at the exchange rate, I look at it very much on that basis. I don't think it's sensible to sort of pack it all up as we normally would and say it's all behaving normally, because the correlations are not actually.
Governor Ueda, there's also many colleagues at central banks, I guess, around the world are building up gold reserves. Is that the only real alternative to the dollar?
I think it's up to.
All right, I think we're going to get a bullish breakout now.
What areas like
that does look bullish right there. At least that little
China would do in terms
a little
of
pattern right there looks bullish.
The efficiency or convenience of their currencies, like the kinds of things.
Yeah, I think the opening range is more
capital markets integration.
It's a better option on the ES.
Change the degree.
It's a better option. The role of this was kind of a fake out. Fourth, third. I guess depending on who you would ask. it wasn't 10 points, so I wouldn't necessarily say that that was a good
I would tend
trade.
to think that
But
yes, it might very well be. But for a major change to occur will take a lot of time and will require a lot of effort. And I completely agree with the points made by Andrew about the dichotomy that we're seeing at the moment. And that might be an indication of the fact that investors are looking at options. This is what investors are saying. They ask questions, they seek alternatives, and whether that translates into a general lack of confidence that will be further fueled by more
Santiago, you think
uncertainty, more
that
unpredictability, a bit of a jump
you think
in
we'll
the
probably
unknown
see more
on several fronts, not just
a
monetary
move to the
policy,
downside?
not just
Well, I mean,
economics,
well,
but
maybe on the
beyond that in
Nasdaq,
terms of
but
security
right now on the
for
ES,
instance.
if
I
we
think it
don't,
remains
if
to
they
be
don't
seen. It's
reject
not
it
going to happen
at that
tomorrow,
high right
overnight.
there,
It never
it's
did
highly
before.
likely to continue
There's
up
no
to the
reason to say
upside.
no, but
The structure
there is clearly
suggests
something that has
that it can go
effectively
higher on the
broken,
ES.
and
Maybe the
whether it
Nasdaq
is
will probably
fixable or
see
whether it is going to continue,
maybe more
I
downside
think the
before
jury
upside.
is out on that front.
Chair Powell, how do you think
The
it
reason
will
why I
happen
say
in
that is
2025?
So on,
the reason why I say that
first
is
we
because you got higher
we're going to
lows,
look back on 2025.
Yeah, how will historians look back on
higher
this year? Is
highs.
it pivotal?
So right now, technically, the ES at
It's
least
clearly
is trending to the
it's an
upside
important
at,
year.
right
There's a
now.
lot going on. You know,
We could get
trade,
something that that
and,
breaks the trend. I mean, obviously,
I'm
if
hopeful
they
that we'll look back
break through
on
the
it
trend, then
as a
come
year
back,
where we
and then then the structure would
challenge
suggest on the
significant
ES that we're
economic
going down. But
changes. And you know, our job
so
is to make
far,
sure
the
that that is the
Nasdaq.
case.
When we look
You've
at the
been attacked
hourly
by the
charts,
president
I don't know,
once
man.
on a personal basis. Does it make your
This is the
job
hourly
harder?
chart on the ES.
I'm very focused on
That
just
looks
doing
very
my job.
bullish.
I mean, there are things
This is the hourly
things
chart
that
on the
matter are
Nasdaq.
using our tools to achieve the goals that Congress has given us: maximum employment, price stability,
That's a bullish,
financial stability.
well, that's the hourly
That's
candle
what we're
on the
focusing on,
Nasdaq so
100%.
far. We'll see.
Madame
But
Lagarde,
if
you were
to the
in same
downside,
position
where are
as
you
Chair
targeting?
Powell, would you do anything differently?
I think I speak for myself, but I speak for all colleagues on the panel. I think we would do exactly the same thing as our colleague Jay Powell does. The same thing.
Yeah, the ES is a lot more cleaner when it comes to these orbs. It's just a lot slower than it's just a lot slower. For obvious reasons, obviously.
Governor Bailey, is the rest of the world decoupling from America but pulling tighter elsewhere? How do you see fragmentation happening?
Well, fragmentation, were it to happen, in my view, is bad for activity in the world economy. No question about that. I mean, if we reduce the openness of the world economy, that will be bad for activity in the world economy. Now, I temper that in one respect, because obviously we have learned a lot about the robustness of supply chains over the last 5 years, and it is of course appropriate that there will be adjustments to that. But if we see a breakdown of the openness of the world economy sort of beyond that sort of resilience that we do see as needed, then that's bad for activity, it's bad for the world economy, and that I'm afraid is something that I think we need to be very clear. I've said a number of times, look, there are reasons why this is happening. It's not right to just go around saying this is all wrong. There are no reasons why this is happening. What I think is very important is that we get back to a governance of the world economy where we can address these issues in the appropriate multilateral fora, and get to the question of what lies behind these issues, what's at the root of these issues, what exactly are the issues, and what do we do about them? And I can't emphasize this enough, that I think it's an obligation
this
for
thing
all
is
of us
definitely
who are
holding the
obviously
market
very
up,
heavily
for
involved
sure.
in the governance of the world economy. We've all got very big responsibilities to say that is our duty, to get back and to the process of saying, what's caused this and what do we do about it?
Yeah, you're right.
Underlying issues and how do we address them? Because
the only thing is that with the minis,
But
I
what
can't
kind of
break them up.
fragmentation would it be? Is it again, are
So
you fearful that the world is splintering?
I can't break them up.
Or is there a pool that's just moving?
Well, I think if it was a breakdown of trade in the world economy, obviously exactly how that would manifest itself would remain to be seen. But it would be running against a long period now where we've been building the resilience of trade in the world economy. We've been building openness. But as I said, I want to sort of temper that by saying, look, there are issues. I don't think we should say there are no issues. This is all made up. There are issues, and we need to address what they are and work them out. But we need to do that in the context of a commitment to a robust, open world economy.
Governor Rhee, as the only governor here representing a non-reserve
So Santiago says
country, how
712.
concerned are you about
And yeah, I definitely
fragmentation
agree
of
with
the
that,
global financial
Cape Trader.
system, and the risk
I definitely
at the
agree
end of
with
the day
that.
that the U.S. may be less willing to provide dollar liquidity in a future financial shock.
No. But I think I mentioned that we are quite vulnerable to the fragmentation. But in reality, as a small country, it's a pity that we can raise our voice, but in reality, we cannot change the course. So we have to probably take it as an environment and to adapt to it. What matters is we talk about economic fragmentation, but for a country like us, the most serious issue is combined with security. And for that issue,
Honestly, I forgot. It don't even matter at this point.
But as for the dollar liquidity support, as demonstrated during the global financial crisis and pandemic period, the standing dollar swap lines with 5 international financial centers and the 9 ad hoc swap.
We're trading on low liquidity right now.
Non-reserve currencies.
This is normal liquidity for the ES. Actually, this is decent liquidity for the ES, but for the Nasdaq, that's low liquidity for the Nasdaq.
I believe that the U.S. Fed will extend their swap lines again, which is very important. And but one other problem for a country like us is we know that the U.S. provide ad hoc swap lines as long as there is a global dollar shortage. But issue is what happens if there is our own problem and there is no.
All right, let's see if we can get a move up to the target. Yeah, I think I'm gonna document the Nasdaq for the stream. I think I'll take the orbs on the ES. The Nasdaq is just too much. And when I'm in the fund, I don't even trade the Nasdaq in my funded account anyway.
Actually, these reserves become much more effective tool to defend ourselves.
Jay Powell, on fragmentation.
Well, I guess I'll just
all right, we're in.
What Chang Young said, which is
we're in the Nasdaq again.
Nothing has changed
after that false breakout. We'll see if we can get our money back.
We're still prepared to use them in situations where it's within our legal authorities and where we think it makes sense. So.
All right, so we'll see what happens here.
We're aware that that's a big contribution that we can and do and will continue to make to global financial stability.
I think my target is in a good spot too.
How much do you think about fragmentation and the impact this could have on Japan?
See, on the trade side, I think a lot about what will happen to Asia, even Asia excluding China.
You're in long right now, so, Alfred, or did you get your long within the range?
The relative tariff rates imposed on the region relative to China or relative to other countries. But there's a fairly strong intra-regional trade taking place during the last decade or two. Also, there's new countries like India growing at very high speed. So I hope there's resilience.
So what you did was you waited for the false breakout. You bought the 50% of the range and almost hit your stop. But you was able to profit on this this long.
On the
That's
financial side,
yeah, the ES is. I mean,
I don't have much to add.
The ES is too, the Nasdaq is too much.
But it would
We're going to stick with the ES for sure.
To keep trying
in the funded accounts.
Approach to things like swap lines. We have.
We're going to stick with the ES for sure.
Doing something similar or continue to do something similar would be important.
Madam Lagarde, you've often spoken about the role that Europe could take in a fragmented world. How do you see that developing in what kind of time?
If I took the false, so I wouldn't necessarily say this is a false breakout.
Europe has witnessed in the last
but that news wick, I don't think if we didn't have this news, I don't think this wick would have been that big.
Major challenges to its
but it doesn't matter.
Way of doing business.
We got it.
The assumptions that it has
we making money on the
about
ES.
Security, about supply, about
we making money on the ES as we supposed to.
Whether you look at what the horrible Russian invasion of Ukraine has precipitated and how that has impaired the sentiment of security that we in Europe had, and the sentiment that we could, forever rely on the protection of others, that has been impaired significantly. When you look at the energy supply on which some of the European countries in particular, but most of us have relied upon, namely access to
this is just a 3-lot.
oil and gas supply from Russia.
This is just a 3-lot.
Significantly, and we had to
imagine if I put like a 6, I'll be up $2,600 right now.
Where destination was inevitably China in the main, that has already been challenged as a result of the fragmentation that is not just a risk, but which has happened. If you combine that with the technology risk that we could all be under, either because of political determination or because of shortage of supply, whether it's on the front of microchips or
well, it just hit 10 points.
In a situation where
it just hit 10 points from the opening range.
And where we
this will probably be a good spot if you're in this to take some profits.
I hope this is my of better,
because I mean it could potentially pull back to the 21, but
significant structural
I hold out for my target
to be more independent, be more proactive,
because I know eventually it'll get hit. I might have to endure a pullback to break even, which would suck. But
no.
Just follow the plan.
It takes time.
So moving forward, this is what I'm gonna do. I just kind of wanted to kind of get a gauge of which instrument I was going to play the orb on, and I mean it's unanimous. It's literally unanimous. The orb is on the ES. You can play the orb on the Nasdaq. Alfred has definitely shown that we can play the orb on the Nasdaq and be consistently profitable. But it's too many fake outs for consistency. It's too many of them.
I believe that
over the long run, though, you'll make more money on the Nasdaq for sure. But if you're looking for consistency, it's always going to be the ES. I think what $1,200, $1,300 with a small.
Chair Powell, last year in Sintra, you said
because if you got stopped out on this, if you had a small 3-point stop, you got stopped out on this.
Very long, and then you also said we'll have to do better sooner, something sooner or later, and sooner.
And then you got back in with another 3-point stop on that. I mean that right there is you made your money back. That was a decent amount of money. Yeah, the orb is definitely on the ES.
That is the one thing
definitely
that
the ES.
have said, and my predecessors have also.
I might, or I'm not might. I will.
Path is not a sustainable one. The level
be trading my Tradeify accounts with the ES.
Need to address that.
What I plan on doing is copy trading. So I think I have like 4 accounts that I bought with Tradeify. So what my plan would be is probably just double them up. Instead of having heavy size on one account, I'll just split the size between the 2 and trade them both at the same time as if they're one account. And just do it like that. And I think moving forward, I might just buy accounts just like that. Like maybe buy 2 or 3 at a time, copy trade 2, and just have one as a backup just in case I have a bad day.
Actually, you spoke 2 years ago at this ECB conference. It was your first public appearance.
So I can just spread the risk across those accounts and just move forward like that. It's going to be more expensive, but it's going to save time. It's going to reduce anxiety because all it takes is, a wick like this to kill a trade right here. All it takes is a wick like that to kill a trade and then have it go in your direction. So
how are you finding yourself after more than
we're going to have days like that, especially when we have Powell speaking, we have jolts dropping, the ISM manufacturing and everything else dropping all at this on the same day around the same time. We're going to get wicks like that. So
well, as I was saying at the outset, headline inflation is above 2. Underlying inflation is below 2. I want both.
And I appreciate that, K Trader.
By the time I leave my office.
I think you were also asked what keeps you awake at night in Washington in October. And you talked about the pace
so let's just say the Nasdaq is ripping right now.
Still the same, or do you have other things that you're worrying about?
If we goes right back into the range.
Well, last night.
Another false breakout.
There's a reason for this. Governor E was sitting next to me.
Well, I guess technically,
he told me that
this was the false break back into the range. We got to close. I mean, if they can hold the 21, we know that 21 hold is
I meant the total amount of caffeine rather
We know
than
that if the
caffeine
price
per
holds at
ounce, okay?
21, then we should see a
Anyway,
follow-up
this is a
successful
joke,
breakout on the
but,
Nasdaq here. But
during these international meetings, I get chances to talk to my colleagues, get a lot of useful insights.
yeah, it's not
So
even worth it,
when I
dude.
go to
It's
bed,
not
I
even worth
think
it at
about
all.
those and
And this is what I'm talking
say to
about right
myself,
here.
maybe I should adjust
Too many fake
our
outs and
economic
stop outs on
outlook,
Nasdaq.
our policy strategy in response to these nice comments. And these keep me sometimes awake, but it's a nice thing to do to keep the trust in ourselves.
So we got one, two fake outs. Now we're got price potentially
To all
breaking
of you,
below the
what keeps you
range.
awake at night, given all of the uncertainties and the changing world, Madame Lagarde?
First of all, I can confirm what Kazuo just said, because it
Barry, you
did
think so?
happen on occasions that the following day, after probably a difficult night, you came to see me and said, "Did you really say that yesterday during the meeting?" And I knew that you had been sort of ruminating and pondered what the consequences
Yeah.
were. So it's the truth. It's not a joke.
That's how you know that the market is definitely paying attention to this range. Look at how they bought this range low. It literally went to the breakout.
By that I mean I'm
It
getting
literally
more
went
and
to
more
the breakout
concerned,
and bounced.
about the role that
Man,
artificial
Nasdaq,
intelligence is going to play,
nasty.
about how
Now let's look at what the
distorted
ES
things
just
can be
did.
presented,
I mean, the ES pulled back to my
how
break even
public
as I
opinion
kind of
can be
expected it to do.
manipulated,
I
and,
expected it to do that.
you know, having
But
been
we'll
a
see
lawyer
if
by background,
we'll see
where
if price actually
searching for the truth is one of the purposes that we hold as auxiliary of justice. I'm very concerned by what's happening at the moment and what kind of moral compass and the watchdog of the integrity of data, because we keep saying that we are data dependent, and we are, and we want to see, you know, our projections and our assessment and the analysis anchored in empirical data and understanding of what's happening in the reality of the economy. And I do have this fear that things can be distorted, and that we can fall prey to that, because it's incredibly easy and actually described now in some literature. That is of great concern to me. I mean, I sleep at night, but.
Chair Powell?
So
man, she acting like she don't sleep at
I
night.
have
Shut the hell
a
up.
little more than 10 months left on my term as chair. And all I want, and all anybody at the Fed wants, is to deliver an economy that has, you know, price stability, maximum.
Sitting there fear mongering and stuff like that, talking about she don't sleep at night. You know you sleep at night. Stop with all that bullshit.
You know, I want to hand over to my successor an economy.
Because shit, if the world around them
and so do all of my
goes up in
colleagues, that's
flames.
all we ever want. So that's what keeps me awake at night. Is are we on a path to do that, and how do we?
They are definitely good.
Do
You know,
plan to
honestly,
stay
I
on
think
as Fed governor after your
I
chair
think
term expires?
I think Powell will probably give
today.
or
Yeah,
not
Mary,
Powell. I
what
think
keeps you
Trump
up
will
at night?
probably extend
Of course, my
Powell's
apologies to
term.
Ueda-san, but to me,
I know right now it may not seem that way, but
Scores
for
on the
whatever reason, I
espresso
got
will
this
be
feeling in my
settled.
gut that Powell will actually get an extension.
one concern that I have is unique to our
He'll be allowed
platform,
to
so
remain the Fed chair.
perception gap of the public
Not
due to
because
very
Trump will
rapid
want him there,
structural changes.
but
For
because
example, a decade
it would just
ago,
be a better
our
look
potential
for
growth
Trump
rate is
to
around
keep
3%,
Powell
but now it's well below
as chair.
2%, but people still
And what I mean by
expect the rate
that
to grow
is
above 3% in
Trump
the
has
near
already
term.
got the,
And
not
that
necessarily
actually
the
expedite
reputation of
the demand for the
being a
more
king or
stimulus
dictator or
monetary
whatever
policy and fiscal
whatever
policy,
word you want to use.
while what is we need is
But
a structural reform. But on the
if
other
he can
hand, if
show
I
that,
keep
you
on
know,
talking
even
about
though
structural
him and
reform,
Powell has a
I don't know how
disagreements
far I
and
can go on discussing this structural
they may
issue,
not
because
see
you
eye to
already said
eye,
that it's well
he can't sit here and say that
mandate.
Powell's not
But I
doing his
think what is
job.
important for our country is
He can't
not
sit there
only
and say that he can't,
cyclical issue, but
that he's not doing it
adapt to these
properly.
structural changes, and that is a very difficult challenge.
Governor Bailey?
Well, I want to deliver inflation sustainably at target. As I keep saying to my colleagues, can you please stop thinking of all the shocks that we haven't had yet in my term that we might have? But today's, I mean, maybe I've been sleeping too well because I felt I needed something else to do because today's
You
a
know,
significant day because it's my
we
first
could
day as
see
chair of the
price
Financial Stability
closing
Board
underneath
after
this
hopefully Anthony
range,
Klaus's
but the
enormously
EMAs do not
distinguished
support
leadership.
that. We could
So that
see
gives
it,
me a whole load of other
but
vulnerabilities to think about and worry about
where the EMAs are
when
right
nothing
now,
else to do. But seriously, I
they
mean,
may
there
not
are
hold
issues
it.
in the financial system that
They
we're
may
very
not hold
focused
that
on and
pullback,
will be very focused
but
on
we
in
could
terms
see
of
price
understanding the
closing underneath this
vulnerabilities of the
range.
situation we're in.
Governor Rhee, I also wanted to ask you actually about digital currencies because the Bank of Korea put brakes on testing a central bank digital currency this week. Would you agree that it's more of a priority to find, I guess, the right regulation for the immediate challenge of stable coins than to develop a CBDC that no one may use?
That's a hot topic now in Korea. Surging in the dollar-denominated stable coins, especially recent passage of the Genius Act in the United States, make many fintech companies and advocates of the stable coins to ask the government to allow the non-bank institutions to participate, to issue the Korean won-denominated stable coins. As you mentioned, that we have been experimenting the tokenized deposit pilots with
Yeah, I wouldn't
with a
short the
bank
ES.
in a
I wouldn't short the ES. Not until
network. But I think
the structure
given
is
the
in.
surging demand for allowing non-bank financial institutions
It does look like it's about to come in, though.
Stablecoins in public domain make us a little bit. I have to talk with the government agencies because it's well beyond the Bank of Korea's mandate. From our perspective, what we are worrying about is that if we allow the unregulated
If we get that trend line break, then I'm with the shorts with ES.
Exchange into dollar-denominated.
We get that trend line break, I'm with the shorts.
Capital flow management regulation. We don't know whether the critic says that the new technology in blockchain can.
We got this triangle right here. So the bears has already broken down into this space.
Very well.
Now they have to break below that trend line right there.
Strange transaction very easily, but we're not so sure whether this is true. And also there's a narrow banking issue, many other issues. So I think I have to talk to the government authorities how to handle this kind of regulations.
Andrew Bailey?
Yeah, I mean, it's an important subject. It's one of the subjects that we will have on the agenda for the FSB, no question about that. You see, the thing that I think is about stablecoins is that, and here I distinguish them from something like Bitcoin, is that they purport to be money. They purport to have the medium of exchange, function of money. And therefore, they do have to meet the test of money.
Right now is the fight to control this space right here.
Money, about the so-called singleness of money, which is really all about them being.
The bulls can hold this trend line,
their nominal value, and for me,
and reclaim the space.
As to what.
That's the only chance that the bulls have. But honestly,
comes out of all this.
Man, they got a lot of work, man. They would have to literally break out of that,
if they don't,
turn around and use that trend line as support.
If they're purporting to be,
that's the only way that the bulls can be successful here. Which, honestly,
I have a relatively strong view on
I
that.
mean, if you look at the angle of this triangle, I mean, that's a lot of work. That's a lot of work for the bulls. And all the bears have to do is, or once the buyers fail here and the bears hold it, I mean, we could see that move down. I mean, that is the path of least resistance, but we'll see. The market's been super bullish, so we'll see if the bulls can recover here.
And ourselves as the public servants in charge of securing and protecting that public good. My fear is that blurring of the lines that I mentioned earlier are likely to lead to a private.
Santiago says that he's searching for 712.
This is the purpose for which we've been appointed to do the job that we have
on the Nasdaq, but I think price is about to come back into this range.
Money. I think it risks undermining our capacity to conduct monetary policy, and I think it's risk weakening the sovereignty of those countries or those regions which inadvertently become subject of the use of that means of payment infrastructure / alleged money, and we should not only just consider it, but determine what our policy should be about it if we mean what we say and we protect what we have to protect. Thank you.
Chair, I actually have a question. Do you fully support the recent proposal driven by the Vice Chair for Supervision Michelle Bowman on rolling back capital rules. Would that actually meaningfully improve liquidity in the Treasury market?
I do fully support what we in fact voted for, what we put out for comment, which is sort of putting the leverage ratio back where it should be, which is a backstop to risk-based capital. And so yes to that question. Let me say on stable coins, if I can.
Yep.
I do share the concerns that you hear here, but I also think it's a positive step that we don't have a regulatory framework for these now in the United States. We tried very hard in the last Congress to work with people on both sides of the aisle to create such a thing. Now it looks like we're well on the way to creating a framework, which I think is something we need. If we're going to have stable coins, and apparently we need to have a federal and state level regulatory framework, which I think we're making progress towards having.
We only have a
He
couple
just said
minutes
something
left,
that
but
might have,
many
let's
of
look
you
at
have
that
plenty
real
of time
quick.
left in office.
He says
Others
that
will
we're
leave
going to have a
sooner.
stable coin.
Knowing what
We
you
got to
know
look at
today,
stable
Governor
coins because
Ueda,
we will
if you
have
already
them.
had to offer some advice
Let's
to
look
your
at,
successor,
let's look at that
whoever
real
that
quick.
may be, what would it be?
I don't know. If I finish in 2.5 years or so, maybe, as I said, inflation would be at 2%, but I will not have finished reducing our balance sheets to appropriate levels. So I would say to my successor, take great care in proceeding with further reduction of the balance sheet, size of the balance sheet.
I like that. Christine Lagarde?
I don't think I would say anything because I remember my predecessor telling me that it would be a walk in the park. So I'd say nothing. But I would share the ambition of Jay Powell. I would want to hand over, job as well done as possible and results achieved as much as possible.
So quickly, we're trying to deliver macro stability, financial stability, economic stability for the benefit of all of the people. If we're going to do that successfully, we need to do it in a completely non-political way, which means we don't take sides, we don't play one side.
Yeah, I'm gonna stick to the Nasdaq or the ES for the core.
Issues that are really not.
The Nasdaq is just too much.
And we just focus on those things. Really, we're trying to have it be so that the public lives their best economic lives, and so elected policymakers can make the really important decisions in a stable environment. And so that's how I think about it.
Governor Rhee?
I can say something, but I don't know whether my successor will take it seriously. But given that I mentioned structural issues, I hope that the Bank of Korea continue to raise voice outside of just monetary policy for general economic issues.
And Governor Bailey?
Be humble. So we're exercising real power. Many people think we are not humble. Be humble. And I'll say this, if you want an illustration of this, Christine and I were both in Ukraine the week before last. If we think we have it difficult, spend time with the Central Bank of Ukraine. Nothing.
Yeah. Thank you so much to everyone for a wonderful panel. Thank you.
Thank you to Francine and to all of our panelists for doing such an excellent job of bringing today's first day of Sintra to a fitting end. For those of you in the room, just 2 pieces of housekeeping. We'd like you all to vote on the Young Economists competition. To do so, please go outside into the foyer. There's QR codes on the posters. Click on them and then use the code on your badges to choose your favorite entry. And then please come and join us downstairs for the group photo too. And for those of you watching online, thanks a lot for joining us, and please join us again tomorrow morning for day 2 of Sintra.
I don't know what the heck that was about. Okay. So yeah, we shouldn't have expected Powell to say anything outside of, this was not like a conference or I'm talking about anything serious. This was just a panel. Okay. Mm. Huh. Ugh. Say my order got rejected. Hmm. Okay, I could have sworn I did this, but maybe I didn't. Hmm. Hmm. Okay. All right. Hmm. I wonder why that's happening. Okay. I think I blew this account. Yeah, I blew that account. Okay. Hmm. God damn, dude. Yeah. Yo, congratulations on that, Santiago. He was definitely correct about that. Mm, mm, mm. Yeah, Cave Trader, if you want to post it in the Discord, and I'll show it in the stream. If you want to showcase your accomplishment. Damn. Well, okay. Okay. Commodity exchange. Mm, okay. Mm, oh shit. For whatever reason, when I'm like, man, okay. Mm, Okay. You know it gain weight. Well, okay. Well, the orb worked to the downside today. It worked to the downside today, man. Huh. Hmm. Oh, shit. Okay. Yeah, that's. Um, wow. All right. Mm. Ain't that some shit, right? Ain't that some shit? Oh yeah. Mm. Ain't that some shit? That's some shit. Okay. It just seems like all the markets are broken right now. It seems like all the markets are freaking broken. I'm looking at gold, I'm looking at the ES, looking at all these markets. They're all doing their own thing. Gold is finally dropping and or at least pulling back finally. Trying to find a good entry into that. I'll do my best to help it. It can't wait. I'll do my best to help. What? Fucking gold, dude. I finally get into a long on gold and now this shit want to fucking roll over now. What kind of shit is that? Now it wants to roll over. Wow. Okay. All right. Okay. Now this thing wants to roll over. Okay. Mm. Uh, mm. And the funded account, no less. Mm. Mm. I don't know why this thing didn't want to. I don't know why this thing doesn't want to do that. I don't know why. I don't know why that's doing that. Mm. Oh shit. Yeah, of course. No, I'm honest. No, I didn't. I'm not tilted at all. It's just that I kept. Uh, mm, I'm not tilted. It's just I kept getting stopped out on this or play on Nasdaq. It's like it looks like gold is about to do me dirty the same way. Huh. Okay. Yeah. Looks like gold is about to do me dirty the same way. Man. Okay, man. All right, gold. All right. All right, gold. All right. All right. Shit. I mean, that's kind of. Santiago say you still in long. What did you get in? Did you get in long at what 712? Damn, gold. Damn, it's like that. Damn. Yeah, I think gold is about to do me dirty right now. Gold is about to do me dirty right now. Hopefully it doesn't. Okay, that makes me feel a little better. So you say you made 3,100 on your new, yo, congratulations, bro. Well. The market's really good at, for whatever reason, when you're in it in real time, after months, years of back testing where it works a specific way the day that you do it, the day you actually do it, god damn. Now it wants to work. Well, I guess the upside, the or breakout to the upside, was definitely a trap. Because shit, everybody's getting stopped out now. And I think the orb has to do with has a lot to do with context. I mean, if everybody is looking for a continuation and we got 2 failed breakouts to the upside, well, that might actually be something else that I may look for as well. Let's actually look at that and see if that's like a trend. If we get multiple failed breakouts at one side of the market, do we see just the market just goes to the other side? I mean, we do see like a sweep of liquidity here, but not anything, not a failure or anything. We get one, they hold the pullback, and then we get a move up. Yeah. All right. Shit, all it takes is one day, cave trader, especially when you're trying to be consistent. God damn, bro. God damn. Yo, that's short. Man, look at that damn short go. God damn. Look at that short go, man. Look at that short. I know the Bears are eating. I know the Bears are happy that they're finally getting that short that they was looking for. Yeah. Shit. Actually, let's look at that. Let's look to see. So did we get the no, we didn't. We definitely did not. Or yeah, no, we didn't. We did not. We did not. That was a straight loss. 650, 640. Yeah, that was a straight loss too, man. That shit just ate through that damn thing, man. Looking at 650. Yeah, it ate through that shit. Damn, it ate through it. All right. Yeah, I know, man. That's what sucks. I'll do that one afterwards. The ore breakdown finally works, and you're not a part of it. Okay. You said I put limits. I mean, I had those limits there just in case it broke down. I mean, I figured that 735. God damn, look at that. Damn. On the hourly chart, it was more defined. But I had my limit sitting right here. I figured that the Bulls will at least. I didn't think they was going to give it up like that. It was at this breaker structure to the upside. That's why I had my limit setting just in case we did see the breakdown. This is where I expected for the Bulls to at least bounce it, show some initiative that they wanted it, but they said, no, you got to stop running instead. So that's why I had those limits down there. That's why I had those limits down there. But oh yeah, I'm talking to I forgot. I was talking to support. Bro, what? Okay. What? All right, man. What? Yo. So, all right, man. No wonder why they pushing this no wonder why they're pushing it for the starter plus. So my funded futures, right? I didn't even know this. Why would they scale it like that? So if you want to be risk adverse and manage your risk on the starter plus accounts, either you're only allowed to trade 1 mini or 5 micros below the $1,000 threshold. Why does that make sense? Why does that make sense? All right, man. All right. Okay. I don't know why that makes sense. Here I am trying to be more risk averse on gold, and I'm not allowed to do that apparently. Why they do that? So I got to risk it all with 1 mini, or try to get as much profit as possible using 5 micros. That's crazy. That's crazy. God damn. Is that the same way on the no, on the starters? I don't think so. Yeah, it looks like they might be trying to get rid of them starter accounts for good and only have the starter plus. Okay, so yeah, the starter plan, I can have, yo, what the fuck is up with that? Hmm. What is up with that? Okay. Hmm. What is up with that? Hmm. So risk it all with minis or accept that I can only trade 5 micros. Why would they do that? Man. Ugh. Hmm. Hmm. Yeah. That's like a whole move. Okay. Hmm. I might just start trading the orb on I might just try to start trading the ES orb. That means I have to make 9 points on the ES. We'll see how that goes. Actually, I might just start doing that. I haven't been trading the orbs in my oh my god. Hold on. Did I make a mistake? Did I make a mistake on the ES orb? I think I made a mistake on the ES orb. I think, yeah, I made a mistake on the ES orb. I mean, I'll get this. I'll get it. I think I made a mistake on the ES orb. Actually, let me yeah, I don't know, man. I don't know. Yeah, I just can't seem to get a win today. Can't seem to get a win today. I have to come back tomorrow. Something. Figure something out. All right, Gold. I just need you to work out. I went long on Gold at that double bottom, so I just need you to work out, Gold. That's it. I just need you to work out for me. Yeah, so it looks like this Gold trade is somewhat working. Okay. Yeah, it is. Hey, I mean, if the ladybug market is booming, I'll trade it, and I'll manipulate the ladybug market too. You know how it goes, gain weight. If the ladybug market is booming, I'll go over there and manipulate that market too. Yeah, my fund of futures is dirty for that one. They're dirty for that. The fuck? What are you talking about? What are you talking about? Smith trying to slide his way out. Talking about now I owe him an apology. Bro, we was talking about yesterday's price action, which worked. I was telling Smith to stay in his long yesterday. And unfortunately, he got out. He panic sold right before it pumped. He got Bogdanov. He said, sir, he did it. He sold. Pump it. I told him to stay in the shit. I told him it was a fake out. And that the bulls were that the market was just shaking out the weak hands. That's all that shit is. That's all it ever is. That's all it ever is. It's to shake out the weak hands. When you have a diamond hand and you hold, you'll be rewarded by the market. Yeah, it was, wasn't it? And you know your boy was a part of it. I told Smith, I was like, bro, you gotta hold that shit, man. If you got your stop where you need to have your stop at, just accept that that money may be gone. I know it's easier said than done, but I want to get into the mindset when I send my money off to make friends that they may not ever come back. And you kind of have to accept that. Send your money off to war and hope that they come back with friends. I told him to hold, and he panic sold, paper hands. I had to send him the diamond emojis. The diamond emojis. And now he talking about I gotta owe him an apology. Bro, we talked about yesterday. He was not talking about today. Well, like I said, I bought gold. It just sucks that, man, it's like I looked at this shit last night and I was like, I'll just wait for the pullback. And then I come back to and then gold super pumps afterwards. And then now, all of a sudden, now the bulls are gone. Like, what the fuck is up with that, man? What's up with that? Where's all the bulls at? Man, gold did this stupid ass freaking retracement up, traded 10 million points to the upside, and I finally get in long, and now this shit don't want to. Not like, where's all that bullishness at, man? What's up with that? All right, peace out, game weight. You know, it's funny that gain weight after the mention of apology letters, gain weight still hasn't written the mandatory apology letters that he had to write. Right now, gain weight is up 10,000 pages right now in apology. 10,000 pages. He still hasn't turned that in yet. I ain't being petty. I'm just saying. People keep saying that, oh, sure, no, you don't know what you're talking about. Well, all right. I mean, on news days, when the market is kind of being irrational, those are the days that I have a hard time with the market. But on any other days, the market is business as usual. Business as usual. Oh, shit, it's 10:30. Well, all right. All right, guys. Man, I guess time flies when you're losing money, right? It flies when you're losing your money. But it's okay. We'll get the money back as always. Today was just not one of those days. I guess if you was a bear, you're definitely happy. Finally getting some of that money back. Yeah. So congratulations to the Bears today. Congratulations. But that's it for me today. We'll definitely come back later on tonight, and we'll definitely look for more opportunities to earn some more money. And with that said, peace out, everybody.